What RFK said is I think we should acquire 4 million Bitcoin. And what Trump said was, we will not sell our Bitcoin. Okay, so if you look at the United States and say, what is it the United States won't sell? They won't sell their national parks. They won't sell their nuclear stockpiles. And they won't sell their Bitcoin. They would sell everything else. If they seized $1 billion of Apple stock or Microsoft or your building or your sports team or your Picassos or your Leonardo da Vinci's or your diamonds or your silver or your gold, they'd sell it. But you do not sell your Bitcoin.
Even though it hit almost all-time highs of $73,800 earlier this week, Bitcoin is still having a tough time. Bitcoin trading is even crazier than normal right now because of market nerves about the upcoming U.S. presidential election. Open interest is at an all-time high, and now people are thinking that the price of Bitcoin might go down even more before it starts to rise again, with a local low at $66,000 and a bounce. Titan of Crypto asked about a chart that showed Ichimoku cloud data for a day and price going below one of the main trend lines of the indicator. Senator BTC couldn't close above tenon, which meant that the price might go down even more. Afterward, he said that if the rise is proven, we could see a repeat of Kuhn around $66,900, which could mean a local low.
Going to either drive the Bitcoin bull run or it's threatening. It's kind of like, is Manhattan threatened by what goes on in Vegas? Not really. I mean, there are different things going on. And I think with regard to all the other crypto use cases, right? Whether it's a DeFi network or a digital currency network or a meme coin or an NFT or whatever, all those things, they're different applications. They meet the needs of different investors. They have different regulatory issues. Last week, MicroStrategy raised, $1 billion in a convertible bond issue. We put not quite half of it into Bitcoin. And then the week before, we raised more than $1 billion in equity we sold in the capital markets. And BlackRock has basically raised $20 billion plus and put into Bitcoin via IBIT. That money is flowing from people with hundreds of trillions of dollars, and they're making the decision to buy some Bitcoin-backed instrument or own a bond or own a building or own a portfolio of Magnificent Seven stocks. And so the thing that's going to drive Bitcoin is going to be traditional money held by institutions, high net worth individuals, and corporations. When Google has billions of dollars a month and they either buy some bonds or they buy their stock back or they buy Bitcoin, right? They're just looking for capital preservation. So Bitcoin's very straightforward. These other things, right? They have their own thing, right? I will acknowledge people like all these other things, right? And they're all interesting. And let's say gambling. People like to gamble. And if you gamble on an Indian reservation or you gamble in Vegas, maybe you make a lot of money and have a lot of fun. But if you do online gambling, it did get banned. And some guys got arrested for it because they crossed, a bright line. Right now, what's clear is that there's regulatory support for public companies and institutions to hold Bitcoin. There isn't regulatory support or consensus for public companies or institutions to hold ETH. And that's above my pay grade. I don't make the rules. That's just what it is. But generally, it's well understood that if you have a public company and it's not listed, say, in the United States, you can't move the listing to the United States and get approval from the regulators to trade unless you're holding Bitcoin only. So the safe choice for a publicly traded company or for a large institutional investor is Bitcoin. I think all the other crypto assets fall into a gray zone, and there's a lot of questions to be answered about who can handle them and what their future is. And yeah, that's a really big if, but MicroStrategy wouldn't, because MicroStrategy is 150% Bitcoin. So I leave these other things. Look, they're gold miners and they do gold, and there are some people that do platinum and some people do palladium. We do Bitcoin, right? We're 150% Bitcoin. We're going to be Bitcoin. And the only thing I like more than Bitcoin is more Bitcoin.
Before, Titan of Crypto said that $1,300 was a key resistance level that needed to be broken in order for Emoku to become support on monthly timeframes. Bitcoin, meanwhile, closed out $200 million worth of long bets on its way down to where it is now, which included a short drop below $68,000. It was said by a well-known trader that the area between 65,000 and 69,000 was a must-bounce zone. This was in reference to the week's trip to near all-time highs. May still be a move to the upside for now. Let's see if we can get this bounce, and then we'll decide what to do next. On November 3rd, he came to the conclusion that while some saw a bigger correction coming, others believed in a market turnaround. Bitcoin has pulled back to the 0.618 Fibonacci level, which is a typical support for healthy pullbacks. Trader Alan Tardigrade said that if this level holds up the dollar BTC, there will be more sudden moves. Trading sources all agreed that there was a chance of high-end volatility during election week, which is also when the Federal Reserve will make its next interest rate decision, even though Bitcoin fell below $69,000 on Friday.
I think what's clear here is the Overton window is shifting. 4 years ago, the question was, is the government going to ban Bitcoin? And 4 years go by, and now the discussion is how much Bitcoin should the government own or buy, and should they buy more, right? That's a major shift, right, for people that are paying attention. I'll note, right, what Senator Lummis said is we should accumulate a strategic Bitcoin reserve. What RFK said is I think we should acquire 4 million Bitcoin. And what Trump said was, we will not sell our Bitcoin. Okay, so if you look at the United States and say, what is it the United States won't sell? They won't sell their national parks. They won't sell their nuclear stockpiles. And they won't sell their Bitcoin. They would sell everything else. If they seized $1 billion of Apple stock or Microsoft or your building or your sports team or your Picassos or your Leonardo da Vinci's or your diamonds or your silver or your gold, they'd sell it. But you do not sell your Bitcoin. Why is that? Because Bitcoin is the most scarce, desirable property in the universe, right? It's global capital. And if you want it, why wouldn't you do it? Because it's the best thing to own forever. But why else wouldn't you do it? Because if people do stop using bonds or sovereign debt as a long-term treasury asset, what's the next best thing they're going to go to? Well, the logical next thing to go to is Bitcoin. And so the competitor to holding bonds as the global capital asset is Bitcoin. So the smartest thing you could do to support the US dollar is simply buy 20% of the thing that everybody might one day switch to before they get there. It's kind of like the US buying Louisiana territory or buying Alaska, or just, if you have Virginia and the Eastern colonies, you might as well get the rest of the nation, because if people go west, wouldn't you want to own the place they're going to go to? I mean, that was generally the idea, So Bitcoin represents the next financial frontier. You ought to buy it because it's a smart investment, but you should also just buy it because if people lose faith in all your other instruments, that's where they're going to go, and you might as well be there and put your flag there before they get there, because that way you win no matter what happens.
We are still seeing a lot of interest in the market as OI for total BTC futures and BTC options stays high at $4.65 billion and 25.3% billion, respectively. This is an increase of 24.2% and 36.76% from the beginning of trading. In part of its most recent bulletin to Telegram channel subscribers, QCP Capital talked about choice. The market is trading BTC 7-day implied vols at 74.4%, which is a lot higher than the 41.4% drop seen in the last 7 days. This shows that there is a big risk premium around the elections.